In 2019, Apple and Goldman Sachs were preparing to launch the Apple Card, a major move for the iPhone maker's foray into financial services. Apple wanted to make the product as the most secure credit card ever, but this raised legal concerns for Goldman Sachs. Despite this sticking point, the launch was successful, and it proved to be a learning experience for Apple in navigating the red tape of financial services. Now, 4 years later, Apple is stepping up its efforts to expand further into financial services. In the past 3 weeks, Apple, with Goldman's help, has launched two big products: Apple Pay Later and Savings, a high-yield savings account. Apple's scale and ambition in the financial services space has many banks and providers of financial services worried. The company has 1.2 billion iPhone users, a $2.6 trillion market cap, and a history of disruptive innovation. Its services division alone generated $55 billion in profit last year, higher than JP Morgan and Citigroup combined. Apple has made it clear that it wants to transform the industry in payments, transit, and identity. Its slow burn strategy of incremental steps gives it a sustainable advantage over time. Apple Pay is the clearest example of the company's strategies in finance. Despite the slow start, with just 1 in 10 global iPhone owners using it in 2016, the user base grew to 50% by 2020 and reached 75% by 2022. This success has led the European Commission to open an antitrust investigation. Gene Munster, managing partner of Deepwater, believes that Apple's long game in finance and payments will take 5 to 10 years, but eventually will think of Apple in the same vein as Citi, JP Morgan, and Wells Fargo. Apple's current moves in finance and payments are laying the foundation for future growth. While it may not have insured deposits, the company is considered by some to be a bank because of its ability to move, hold, manage, and lend money. Its Buy Now, Pay Later product and high-yield saving account with Goldman Sachs are just the beginning. The company's scale and resources give it an extraordinary competitive advantage, according to JP Morgan Chase CEO Jamie Dimon. American Express CEO Stephen Squeri admits to being paranoid about Apple and Amazon, which he calls phenomenal companies with deep links to the consumer. In conclusion, Apple's ambition in financial services is not new, but its recent moves with Goldman Sachs show that it's stepping up its efforts. Its slow burn strategy, which has been successful in other sectors, is evident in its approach to finance and payments. Banks and other providers of financial services should be worried about a company with 1.2 billion iPhone users and a $2.6 trillion market cap making moves into their territory. While it may take 5 to 10 years for Apple to be on par with the big banks, its current moves are laying the foundation for future growth in the industry.